Hi, I'm Frank Holsteen, Managing Director of Wespath's Investment Management Team. Today I'm excited to be with you to recap the investment highlights from the first quarter of 2025. We know that this has been an unnerving quarter for some of you, but I would remind you that we expect ups and downs in the market. Many of the market trends I've spoken about in recent videos came to a halt in the first quarter. The performance of U.S. stocks, as measured by the S&P 500 index, is one example. The S&P 500 dropped 4.3% in the first quarter, and that decrease was driven by a decline of 5.6% in March alone. It was the S&P 500's worst month since December of 2022. That was when the U.S. Federal Reserve was aggressively raising interest rates to fight inflation. For some perspective, the S&P 500 was up 25% in 2024 and over 26% in 2023. Those gains in 2023 and 2024 were largely driven by the so-called Magnificent Seven companies: Apple, Amazon, Alphabet, Meta, Tesla, Microsoft, and Nvidia. But those seven companies dropped roughly 15% in the first 3 months of 2025. The storyline of U.S. stock market dominance also reversed. Non-U.S. stocks climbed 4.6% in the first quarter, measured by the MSCI ACWI ex-US IMI index. There were many reasons for the dramatic shifts in stock market returns. One of the big reasons was uncertainty around tariffs. President Trump's administration announced, levied, and paused tariffs on various goods coming into the U.S. during the first quarter. The threat of tariffs and their repercussions created fear and uncertainty among investors who worried that tariffs could ramp up inflation and push the U.S. economy into a recession. Additional tariff plans were announced on April 2nd, and that announcement increased investor concerns about the U.S. economy. Amid the uncertainty around tariffs and inflation, as well as news of planned economic stimulus in other parts of the world, some investors moved money out of the U.S. and into international markets, including Europe. German stocks, for instance, were up 15.6% in the quarter. Chinese stocks also did especially well in the first quarter, and the MSCI China index was up 15%. My colleagues wrote blog posts about the potential impacts of the new administration's trade policy and about Chinese company DeepSeek, which demonstrated advancements in artificial intelligence that called into question the dominance of the large U.S. tech companies. We've added links to those blogs in the description below. Investors also put their money into U.S. government bonds during the first quarter, which are considered safer investments than stocks. The broad U.S. bond market, as represented by the Bloomberg U.S. Aggregate Index, rose 2.8% in the first quarter. Just a reminder, declining bond yields mean rising bond prices. As always, Wespath will continue to monitor the latest market movements and update you on the most important developments. We are here to keep you informed throughout 2025 and beyond to help you achieve your long-term investment goals.